Good morning, guys. It's time for another educational video because I didn't have trade yesterday. My name is Jakub from FINEIGHT and we will talk about trading ranges because it's really important to understand if you are in a downtrend, uptrend, or in some range. Because every stage of a market requires a different approach. So let's start with some lesson. Then I'll show you some examples on a chart. Imagine that we have some long move, and that's this orange line, number one. Then market creates some pullback, um, and we have move number two. So it's a move against the previous trend. The uptrend is the retracement, the pullback. Then we have move in the direction of the previous trend. We have number three. And I can have a question, is this trading range? Well, not, because you have to see some consolidation, you have to see some congestion, some value area. But this is just swing high and swing low. The fourth move creates the high, this high. We have two highs here. And then we have value area. This is a very strong resistance level, the upper edge of trading range. And this is the lower edge, very strong support level resistance and support level. So we need four legs. It's something like letter N, okay? Sometimes you can see that we have this trading range. I really don't care about equal highs, okay, or equal lows, but we can also have a declining trading range, okay? It's something like a triangle. So you can find many lessons about how to draw trading ranges, such as if you see 5 doji bars, 6 doji bars, 7 doji bars, 1 red bar, 1 green bar, that's 100% trading range. Well, I prefer to use this swing technology, how to recognize that you are in trend. So again, we need number one, move the trend, one move against, one in the previous direction, and one again against the main trend. Then we have letter M, we have value area, we have very strong trading range. So imagine this situation. We have very nice long. I'll use the color here. Then we have retracement over here. Then we have move in the previous direction. And then we have move again to the previous low. So we have declining trading range. So in this case here, I can say market will have a problem to go lower below this point. And it had a problem. It had a problem again here. And market will have a problem here. Look what happened. Market stopped there. So this is major support, major resistance. This is the declining trading range. So we also have some trend lines. Market will stop near the trend line. Look, there was some inside out trade. But basically, we can say that we need four legs. Maybe one nuances. Maybe talk about nuances. Is this a trading range? Here in this case, not. Because it's something like a triangle. We really don't have a trading range. I really don't care if it's a declining or a rising trading range, but I need at least one, let's say, equal highs or lows. I don't have equal highs here, but I have almost equal lows here. So I have, let's say, one part of trading range that's almost the same, and that creates trading range. Again, here we have long move. Here we have short move. But market went higher, so it's not a trading range. I prefer to, let's say, draw this trading range. I prefer to drawing bigger trading ranges, because yes, maybe you can find 1, 2, 3, 4 here. It's a very small trading range, but on daily chart, I can say it's a congestion. Okay, it's very small range, so I think it does not have its value. Here I have very nice short. This is the first pullback. Okay, 1, 2, then we have 3 here, and then we have number 4 here. And again, market will have a problem with this level, and it had a problem. Look at this pin bar. There was a small retracement. So again, we need 4 legs. 1, main trend, move against, move in the direction of the trend, and number 4, again, move against the major trend. It's a short trend here. Short market was going lower. Okay, so if you are going to use this technology, you will be, let's say, focusing on major activity, about major highs and major lows, instead of looking for some small trading ranges, because you have to understand the bigger perspective. If we are in a long, short, or in a range, and this is the value area, look, very nice value area. And if you look at the volume profile, it confirms our idea that we are in a trading range. Again, look, it's 80% of the activity here. 80% of the point of control almost in the middle. So it confirms that we are in a trading range, and market will have a problem with the edges. So thank you guys for attention. It's a way how to recognize that you are in a trading range. And if you are, let's say, trend trader, you can set up some alerts above and below the edges of trading range, and you can wait until market creates that move and breaks out from the value area from the trading range. Thank you guys for your attention, and I wish you good trades.